Hello folks, Ellie Little here with today's 1 Minute Trade. We've got the healthcare sector up. One of the things that people like to say is that they're investors, they're not traders. That means they get in, they buy, they hold. Well, I guess that strategy has something to say for itself, but there are other strategies. And one, for example, is be a long-term investor, yet let trade on the short term as an augmentation to the longer term. So when I look here at the healthcare sector, depending on how you want to do the ABCD structure, if you do it as most people do, or if you do it as I do, either one tells you that you're getting up to a resistance zone that's more than likely going to bring this thing back for the near term. Where would it bring it back to? Well, it would bring it back into this zone. That's the retest, that's the regenerate zone. Yeah, we're only talking about 1%, maybe 1.25% or so, depending on how deep it gets. But a retrace is likely. A retrace is likely off this push. That retrace can be captured. In other words, you can have, say, 10% of your money in this. You take 4% out, and then you try to put that 4% on, or maybe 5% on as it comes back and retest, assuming it looks good. That allows you to have less money at risk the majority of the time, which means you're out of the market when there's more risk for this thing to come back. Now, if you're wrong and this thing just continues to extend, well, if you're patient, more than likely it will come back at least to where you got out, and you can get back in there again if that's what you choose. It's a win-win situation as long as you monitor, actively trade your positions. XLV, strong group, pushing higher, time to take some profits, try to retrace, pick it up again.